On February 25th, the International Departure Hall of Nanjing Airport was nearly empty of passengers. It was a sad sight for the usually busy airport. On February 13th, during the Chinese New Year, the Shenzhen airport seemed empty, with only a few passengers walking around. Many airports in China are not only sparsely staffed, but also poorly managed.
It seems like I got scammed by the mafia. You're completely powerless. My flight was originally around 6 p.m. Then I received a text message saying it's changed to 8 p.m. You can't do anything about it. You only have two options, confirm or refund. You bought the flight ticket to save time, so you have to confirm. Alright, I confirm, and got a refund of 4 yuan. I go through security, and then a customer service representative asks me, "How much did you pay for your ticket?" I say, "Over 500 yuan. He says, "You're not our member. If you were, it'd be just over 300 yuan. I ask, "What kind of member?" Alright, I install their app and put in 2,000 yuan. What a huge scam. This Changsha Huanghua International Airport is a ripoff. I'm starving after going around. I want to eat something, but the cheapest thing I see is a cold dish of pig's ear for 45 yuan and rice for 3 yuan. What kind of place is this? Is this still China? Man, this China Eastern Airlines is going too far. My destination is Zhengzhou, and when I woke up from my nap, I found myself at Xi'an Airport. Hey everyone, guess where I am? I'm at Xi'an Airport. Not only was my 9 a.m. flight from Zhouhai to Zhengzhou delayed by 3 hours, but they ended up diverting us to Xi'an. Seriously, how heavy is the snowfall in Zhengzhou for them to pull a stunt like this?
In the wake of various factors, including the COVID-19 pandemic, China's civil aviation industry has suffered losses for 4 consecutive years, amounting to nearly 430 billion yuan, wiping out all profits accumulated over the past decade. During this period of substantial losses, both the number of flights and passenger volume have sharply declined, while the introduction of new aircraft has continued to increase, resulting in more capacity than passengers. Industry analysts believe that the growth period of the civil aviation sector is over. Over the past 4 years, passenger volume has significantly decreased, especially in international travel. By the end of 2023, the number of international flights had only recovered to 55.8% of pre-pandemic levels in 2019, leading to a situation where many wide-body aircraft, originally intended for international flights, were repurposed for domestic travel. Despite this, the civil aviation sector continues to buy new aircraft. By the end of 2023, China's aviation fleet reached 4,200 planes, an increase of 35 compared to 2022 and 382 compared to 2019. Chang Tao, an industry insider, pointed out, "Looking at the past 2 years, there is almost no need to consider supply issues. Supply is definitely surplus, and the growth in supply is certainly slow." The impact of the pandemic on the civil aviation industry was significant. In January 2020, flight volumes and booking rates began to plummet, with rare instances such as a flight to Sanya having no passengers. Subsequently, many domestic flights in China were cancelled as airlines incurred losses. By the end of February, the Chinese market had hit a new low, with nearly 90% of flights cancelled. As countries successively closed their borders, the volume of international flights in China also experienced a precipitous decline. By April 2020, the Civil Aviation Administration of China began implementing the 5-1 policy to reduce international passenger flights. Each airline could only operate one route to any given country, with only one flight per week allowed on each route. According to civil aviation statistics, the total passenger transport volume in 2020 was only slightly over 400 million, a 37% decrease from 2019, and the first annual decline in passenger volume since 1989. Domestic routes accounted for over 400 million passengers, a 30% decrease from 2019, while routes to Hong Kong, Macau, and Taiwan saw a decline of 91%, and international routes experienced an 87% decrease. Subsequently, in 2022, the annual passenger volume plummeted to only 250 million, lower than the level 10 years prior. This led to a large number of aircraft being grounded. Hainan Airlines revealed that at one point, 96 aircraft were parked for long periods. The industry-wide aircraft utilization rate plummeted from over 9 hours before the pandemic to just over 4 hours in 2022. Despite the large number of grounded aircraft, the number of passenger planes in China's civil aviation fleet continued to grow over the 3 years of the pandemic, from 3,645 at the end of 2019 to 3,717 in 2020, 3,856 in 2021, and 3,942 in 2022. By the end of 2023, the number of passenger planes had reached 4,013, an increase of 368 from 2019, representing a growth rate of over 10%. China was building more planes despite decreasing airline profits. According to data released by Chinese state media, the civil aviation industry suffered significant losses during the 3-year pandemic period, amounting to 97.4 billion in 2020, 84.25 billion in 2021, and 217.4 billion in 2022. Although China has relaxed pandemic controls in 2023, the recovery of international flights has been slower than expected. According to FlightStat, the overall recovery of international passenger flights in aviation travel in 2023 only reached 37.5% of the level in 2019, increasing from less than 10% at the beginning of the year to 55.8% by the end. Although losses have been significantly reduced in 2023, the industry did not break even. The entire industry has lost 28.8 billion, of which airlines have lost 17 billion. A China Eastern Airlines employee, surnamed Rao, told Radio Free Asia that after the pandemic, the aviation transport industry's growth has been weak, especially in the international market. The recovery of international flights is very poor. Currently, the focus is still on encouraging the development of the domestic aviation industry, hoping to increase transportation volume. Because now China's relations with the international community are relatively poor, the number of foreign tourists visiting China has significantly decreased, and there's also a significant reduction in business travelers. Regarding whether China's civil aviation can turn losses into profits in 2024, Mr. Jiang, a scholar from Zhejiang, said that this year is even more challenging than last. Isolation has become a trend, creating a very unfriendly atmosphere for foreigners and foreign companies. For example, there is anti-American, anti-Korean, and anti-Japanese sentiment, and there are retaliatory measures against foreign individuals accused as spies. In this situation, whether it's foreign companies or individuals, they dare not invest or study in China. Mr. Jiang believes that the drop in foreign students from countries like the United States studying in China should prompt the Chinese government to reflect on the economic downturn and the dismal operation of airlines caused by these policies. The oversupply of seats has also prevented airlines from restoring their aircraft utilization rates and occupancy rates to pre-pandemic levels. In 2023, the average daily aircraft utilization rate for domestic airlines was 8.1 hours, 2.1 hours lower than in 2019, with an average occupancy rate of 77.9%, 5 percentage points lower than in 2019. As for the outlook of China's civil aviation in 2024, industry leaders are not optimistic. A general manager of a domestic airline predicted at their internal annual meeting that the industry would add 150 aircraft in 2024. The recovery of capacity relative to 2019 will still outpace passenger recovery, intensifying industry competition. Looking at demand, factors such as lower demand, consumption downgrading, and diversion to high-speed rail will continue to exacerbate the gap between supply and demand, with insufficient market momentum. The FlightStat team's macro forecasts, civil aviation analysis, and micro outlook report for 2024 indicate that the civil aviation industry's growth period is over. It is no longer sustainable to have a good profit model simply by increasing production. China's tanking civil aviation has sparked widespread discussions. Edison from Shenzhen commented, "Some routes have seen fare hikes, such as Shenzhen to Chengdu, with full-price tickets around 1,500 yuan before the pandemic and around 2,500 yuan after. If they're still losing money despite such hefty increases, it indicates the need for major operational adjustments." Another netizen from Tianjin said, With the economy not doing well and airfare rising, I'll basically opt to drive or take the train if I can and avoid flights. Others observed, I recently flew with 2 domestic airlines and 2 American airlines. I noticed that American airlines have replaced many old aircraft with new ones. There are phone or tablet holders on the backs of seats. Compare this with Chinese airlines. On one row of seats, one dining tray is disconnected and needs manual adjustments to barely fit, while the display screen on another seat is almost falling off. Yet domestically, Chinese airlines are said to be advanced. Another commented, more and more high-speed rail lines are being built, and they're losing money themselves, which also leads to losses for civil aviation. Long-distance buses, which used to cost around 200 yuan from Guangzhou to Zhanjiang, can now be found for as low as 50 yuan. Bus companies are also on the verge of bankruptcy. Netizens comment, is there anything in China that isn't oversupplied? Oversupply leads to economic crises. With the economy in such a dire strait, turning around losses for civil aviation in the next few years is just a pipe dream, a Chinese dream. If China has no future, why bother worrying about civil aviation? Since the pandemic, Chinese airlines have suffered along with the overall economy. Previously, according to official Chinese media, China's civil aviation was profitable in the first 3 quarters of 2023, but in the fourth quarter, airlines once again fell into losses. In November alone, the entire industry lost 8.13 billion yuan, nearly wiping out the profits of the previous 9 months. Among them, airlines lost 6.28 billion yuan, with only 2 airlines making profits, while 34 airlines suffered losses. At the end of January, China's 7 listed airlines successively released performance forecasts for 2023, 4 of which suffered losses. On the evening of January 30th, China Eastern Airlines released its 2023 performance forecast. According to the performance forecasts released by the 3 major airlines, China Eastern Airlines is expected to incur a loss of up to 8.3 billion yuan in 2023. Air China is expected to incur a loss of up to 1.3 billion yuan, and China Southern Airlines is expected to incur a loss of up to 4.7 billion yuan. The total expected losses for the 3 major airlines in 2023 could reach as high as 14.3 billion yuan. In 2022, the 3 major airlines collectively incurred losses of 108.6 billion yuan. The announcements made by the 3 major airlines outlined several reasons for the anticipated losses. These included the slow recovery of international routes, increased competition in the domestic market, and factors like fluctuating oil prices and currency exchange rates, particularly the devaluation of the RMB. Hainan Airlines issued a performance forecast on the evening of January 30th, expecting the company's losses to reach as high as 1.2 billion yuan in 2023. Since 2021, Hainan Airlines has been incurring losses for 3 consecutive years, with cumulative losses exceeding 3 billion yuan. As of the close of the stock market on January 31st, Air China's market value fell by 3.3%, China Eastern Airlines fell by 2.4%, China Southern Airlines fell by 1.4%, Hainan Airlines Holdings fell by 0.7%, Junyao Airlines fell by 3.6%, Spring Airlines fell by 1.8%, and China Express Airlines fell by 7.5%. According to veteran analyst Ma Zhu, the performance of China's aviation sector serves as a barometer of the nation's economic health. Current economic conditions in China, marked by shifts from state to private enterprises, political directives, and the government's implementation of planned economic strategies, socialist market frameworks, and anti-espionage legislation, have left investors deeply unsettled. Ma Zhu believes that China's social investment environment has deterred foreign investors from entering the Chinese market, directly affecting the health of airlines. According to data released by the Chinese State Administration of Foreign Exchange on February 18th, foreign direct investment liabilities in 2023 amounted to only $33 billion, an 82% decrease from 2022. This data reflects the impact of China's pandemic lockdowns and sluggish recovery. Foreign investment in China saw its first decline since 1998 in the 3rd quarter of 2023, although there was a slight rebound in the 4th quarter, with a net inflow of $17.5 billion, still 1/3 lower than the same period in 2022. Bloomberg reports that economists emphasize the significance of data provided by the State Administration of Foreign Exchange as it tracks net flows, offering insights into foreign companies' profits and shifts in their operations within China. Correspondingly, statistics from China's National Bureau of Statistics indicate a 6.7% year-on-year decline in profits for industrial foreign-funded enterprises in the country last year. A survey report released by the China-Japan Business Association on January 15th showed that most Japanese companies in China are not optimistic about the Chinese economic outlook for 2024. In addition, most Japanese companies reduced investment or did not invest in China in 2023. 48% of the surveyed Japanese companies stated that the primary reason for not investing or reducing investment in China in 2023 was the uncertainty about the Chinese economic outlook and pessimism about weak demand. According to data released by the Chinese National Bureau of Statistics on February 8th, China's Consumer Price Index, CPI, in January recorded the largest decline in over 14 years. At the same time, the Producer Price Index, PPI, also fell, with industrial product factory prices experiencing 16 consecutive months of deflation. This highlights the continued risk of deflation in the Chinese economy. The country's business landscape has further dissuaded many potential investors. Last year, the Chinese Communist Party revised the anti-espionage law, intensifying its scrutiny and regulation of enterprises, thereby heightening the apprehensions of foreign investors. Furthermore, China's aviation operations are closely related to the tourism industry. China's domestic and foreign policies have increasingly alienated the international community, deterring foreign tourists. A report from a Chinese official think tank stated that in 2023, the entry of tourists into China was unbalanced, with residents of Hong Kong, Macau, and Taiwan returning to and from China reaching 81% of 2019 levels, while the number of entries and exits of foreigners only reached 36%. Moreover, most of these inbound foreigners were traveling for business, with few traveling for leisure. The number of inbound tourists received by travel agencies nationwide only recovered to less than 10% of 2019 levels. Chinese officials often conceal actual data, and there are suspicions that the true numbers may be even lower. Industry insiders shared that numerous travel agencies in Beijing, unable to attract foreign tourist groups, have transitioned to serving domestic tourists instead. Some Chinese nationals returning to China to visit relatives revealed that they were harassed endlessly by the Public Security Department and even insulted. Others who came to China for tourism or business complained that the strict control by the Chinese Communist Party severely restricted their actions, especially in terms of phone numbers and payment methods, making it almost impossible for them to move around. Mainland economist He Junqiao pointed out, the poor domestic economic conditions have led to a notable decrease in domestic travelers flying, which is likely the primary cause of the airline's losses. In addition, He Junqiao said that few inbound and outbound routes had led to losses on international routes. Some international routes are not profitable after they are opened, and some profitable routes need to be used to subsidize these loss-making routes. Professor Zhang Qingxi from the Department of Economics at National Taiwan University stated that with the downturn in China's economy, naturally the number of people flying would decrease. Additionally, he mentioned that some people told him that traveling to Xinjiang for tourism is a hassle, with every action requiring ID checks and full-body security screenings. Local residents in Xinjiang are also restricted from traveling due to government measures, and many policies implemented by the Chinese Communist Party are unfavorable to the aviation industry. He believes that with the poor domestic economic environment in China and fewer international flights, domestic passengers will also decrease. Usually, foreigners visiting China will not just go to one place, they may take flights to other destinations as well. Additionally, with so many high-speed railways built in China, it also affects the aviation industry. Multiple factors are affecting the operations of airlines.